what the heck just happened with the stock of Skechers, SKX, the footwear company that had been among the hottest of the hot. Stock had been up 150% for the year going into yesterday's close. Wall Street had gotten used to Skechers knocking it out of the park every single time. So when Skechers reported after the close yesterday and the numbers were viewed as disappointing, the stock got beheaded, down 31%, $14. So what is going on here? Did Skechers truly blow it, or is the market overreacting? Okay, even though Skechers missed Wall Street's consensus revenue estimates, and that is very important, it wasn't that big a miss. And their sales still increased by 27% year over year. The earnings were definitely suboptimal. Company delivering a 12-cent miss off a 55-cent basis. But that said, the entire earnings miss was caused by that super freaking strong dollar, a $5 million personal injury lawsuit settlement, and increased deferred rent expense and $3.5 million at the company's Fifth Avenue store in New York City. If not for these items, then Skechers actually would have beat the numbers. Plus, the company's international business is booming. Same-store sales at the retail locations increased by 10.4%. Good. Although it's worth noting that, as Skechers pointed out in the conference call, most of the channels of distribution that we're big in had a not-so-good end of September. October seems to be a little bit lukewarm, too. Still, most important of all, Skechers maintained its guidance for the next quarter. Put it all together, and I wonder if maybe this is a great buying opportunity. Although, then again, there's so many weak hands in the stock that obviously must have thought that this was going to be a blowout quarter. Let's dig deeper with David Weinberg, Skechers' Chief Operating Officer and Chief Financial Officer. Find out more about this quarter and his company's prospects. Mr. Weinberg, welcome back to Mad Money.
Always good to be here, Jim.
David, down 31%. Overreaction?
Absolutely.
Tell us
Business
why.
is very good and continues to be very good. Our business in the Orient is good. China held up very well, 175%. In the mid-20s in Europe. We have new markets in South America. We have Central Eastern Europe. Even our domestic wholesale business has held up very, very well. We had some movement from July to June, and we had some great sell-throughs, and we're assured by all our partners that the sell-throughs and the reason for some slight weakness at the end of September was not due to us, but due to an overall condition. So we're feeling pretty good and think we have great opportunity both in this quarter, in the first quarter next year, and still think we can double the business in the next 5 years.
Well, do you think that what happened is the analyst got ahead of himself? For instance, Stern Agee, a fellow who's followed you for a while here, Sam Poser, he was talking about maybe some very strong demand that might have put orders, a backlog up 35, 45%, wholesale growth up 33. Is this just the analyst getting ahead of what you could deliver?
Well, Sam is very positive, and we think he's a good analyst that follows our stock. And you can get lulled to sleep. We had a great second quarter as it comes through. And by and large, all the channel checks he does and all the sell-through data we get from services seem to indicate that we're selling much, much better than we would have showed at the end of September. So, yeah, it could be that the backlog's in, and it's coming. We did have a record incoming order quarter, especially big in August and September. So it's following, and the numbers are coming. I think he's right on, and it will happen. There's a timing issue, and there's a timing issue because of the macro issues in the U.S. By the way, our two big places we sell, China and our own retail stores, are not part of the backlog information, and they're growing obviously very, very big and don't show their increases in our backlogs.
Well, that's what I thought, 20% growth in company-owned stores. But you made some comments about how some of the stores that you were dealing with, they were lukewarm. And I've got to tell you, I was watching what Eric Wiseman had to say. He's a good merchant. I know you like him, too, at VF Corp. And they experienced the same thing, which is now making me wonder, was back to school not that great? Because Wiseman lowered his guidance, and it was quite chilling. That stock was down a gigantic amount today.
Yeah, I don't think back to school for the most part was as good as it was supposed to be or as we thought it could be.
Right.
It started a little late, so people were late reacting to it. Labor Day came very, very late, and it did cause an inventory overhang, although we believe it's not in our product, that did limit what they could do at the end of September and early October. Remember, most of these guys report at the end of October and are very, very picky about how much inventory they closed the month with, even moving away with some hot-selling styles to get rid of some inventory that was slow-moving. And we didn't want to be a part of the promotional cadence as well. So it's going to work out well, and the product will be back, and it'll sell through very strong going into the the end of the year and the first quarter of next year.
Now, at one point in the conference call, you did say October mid to high single digits. I found that a bit worrisome, but I also know that, as you said, these guys are not going to take them on inventory when their quarter's over.
Yeah, I mean, we don't want to be part of the promotional cadence as they put stuff in and compete against that price. And I'm sure they don't want to waste time trying to get their promotional goods out while hot-selling product comes in at full price. So it's all working out well, and I think the timing will work out and come to show significant strength as we get to the back of the year. But first quarter is still very, very good for us. We're doing our inlines with some big customers in the last few weeks. Our sell-throughs are great. They love the new product. It's coming in strong. Europe will stay strong. China will stay strong. South America will pick up. So we have a lot of good things happening going through the end of the year and into the first quarter.
$510 million in cash. You did not announce anything to do with the cash. I know you've got tons of expansion that you want. But if the stock stays down here, do you just say, okay, look, we'll take 10% of that cash and we'll buy stock?
Certainly we'll have conversation. There is money offshore, and there's money that would have to be repatriated or borrowed. We don't really want to do a lot of financial engineering. We think our business is on a great tack, and we'll continue to do so, and we'll show it in the performance and the bottom line. And like you said, we're going to grow everywhere in the world, and we're going to put a lot of investment in that infrastructure to make sure we deliver well, deliver on time, and can continue to deliver those great shoes.
I just want to be sure that it wasn't one or two department stores, though. I mean, this was a kind of end of September, May last at a lot of the different stores that I deal with, right?
Yeah, I mean, it was fairly across the board. Some certainly worse than others, and some had different inventory overhangs, and not everybody. But yeah, it was pretty widespread.
Was there any way you could be able to tell that they weren't going to reorder? I mean, it seems like that you've been in the business for years, and it just seemed like in September they just didn't come back.
It's not that they didn't come back. This is stuff we had allocated for October. And what happens in times past is they'll come take it early if we're hot and they don't have an inventory overhang. They will take this stuff in October. I don't want to give anybody an impression that this inventory is not saleable and won't be sold at full price. And what happens is instead of moving it into September, they'll take it in October and they'll take a bigger piece in November. And if they don't pick up the cadence after that, then we will curtail some production at the tail end of our production cycle and keep inventories in line. But I don't anticipate that's going to be the case.
Do you think what happened here is that, I mean, I look back, the stock is exactly where it was April 23rd. You reported a blowout quarter. People got very, very excited. You just told me it was business as usual, but people got very excited and decided to take the stock up in a trajectory that, you know, was not necessarily in keeping when you came on the show, where you said, look, business is good and it's going to stay good. Did the stock get ahead of the business is good, stay good narrative that you've offered repeatedly on our show?
Yeah, I think it does. I think they told me a long time ago that the pendulum on Wall Street swings to very big extremes, and it obviously swung way too far on top side, although we think we'll get back to those levels as the business continues to grow, and now it's obviously swung way too far the other level. And so it'll create a great opportunity for all those people that keep asking me how they missed it and why they missed the opportunity the first time.
Well, let's leave it at that. I think your candor is admirable, and I knew you were going to come on. A lot of people said, oh, he won't come on. I said, no, that's not their style. They've been at it way too long. Thank you so much, David Weinberg, COO and CFO of Skechers. Really got some good information from you, and I appreciate it. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.